Folks, S&P 5000, where to from here? We're going to be talking about that a little bit today and where the opportunities are in this market. And the symbols that we're going to be talking about today are MDY. That is a mid-cap ETF. TNA, that is a small-cap ETF. CROX, that is, I think, a mid-cap, small to mid-cap. LABU, that is a ETF, putting you long of the biotech sector. And FVRR, small to mid cap. And all of these I'm bullish on going into the new trading week. So let's talk about what the heck is going on with this market. We had the Fed chairman come out only a few days ago and say, listen, no rate cuts for the foreseeable futures yet. The equity markets do a little bit of a buckle. We didn't know which way it was going to go. All of a sudden, boom, through the roof. What happened? Well, when you take a look at the history of rate cuts, it's always the anticipation of a rate cut that gets the markets giddy. It's when the Federal Reserve cuts rates, that's when things get a little bit wonky for the equity markets. Usually they begin to go into a free fall because why? The Federal Reserve is reacting to something. Right now, there's nothing to react to. Yields are higher than recent normal, okay? But over a historical period of time, rates are at the lower end of the normal spectrum. Now, that's going to be a problem in the future because of all of our debt, but right now, the markets don't care. It's all about sentiment, and we need to forget about all the bad stuff that's out there in the economy and focus on what the market is focused on, and that is going up due to the fact that you have a promise of a Federal Reserve that has lots of room to move to the downside if, in fact, they need to cut rates. Simple as that. Also, let's head on over to a chart of the Federal Reserve's balance sheet. And you could see here that over the past couple of weeks, the Federal Reserve has stopped rolling off debt off of their balance sheet. So what does that mean? It just means that there's less supply of Treasury bonds hitting the market and allowing for rates to remain stable. Now, one of the issues that I'm concerned about for this market is, and I went over this on the week ahead commentary, members that's posted in the members area, also sent out to your inbox. I'm worried about rising interest rates. Interest rates broke out last week, but again, they're within a range where it's acceptable for the markets to continue up higher. However, yields moving up higher could be a problem for the markets, but right now, they're not. So the Federal Reserve, by virtue of the fact that they've been rolling off debt off of their balance sheet, what does that do to yields? It raises them up because you have more supply of bonds hitting the market, forcing yields up. Now, if there's less supply hitting the market, well, there's less supply of the product out there. Therefore, the demand goes up, yields go down. What does that mean for the expectation of the market? Well, it's expectations that you're probably going to see lower yields, but that's not what the chart is telling us. Okay, so a little bit of a contradiction here in the market. We'll see who wins this out. Bond prices, the TLT, did not break down last week, whereas yields rose, okay, and they broke out. Now, when you take a look as well at the high yield debt sector, bear with me, I know, it's boring, but it matters. The high yield debt sector, this is a weekly chart. This has been on a tear. So what does that mean? Well, high yield debt is what you call junk bonds. And what it allows companies to do that probably in an ordinary environment going back more than 10 years ago, they'd probably be out of business because their borrowing costs are too high relative to their cash flow. Case in point, you had Caesars come out the other day, symbol CZR, and they were able to refinance debt at 2 percentage points lower than where rates were a couple of months ago. Now, their borrowing costs are still $100,000 per day higher than they were from the last tranche of debt that they just refinanced. However, it's a lot less than what the market was worried about having to pay in the future. Net, That's a positive. That's going to allow Caesars to either A, stabilize, B, bias to the upside. So these are some of the underlying matters that are acting as, at current, a wind at the back of the markets. Now, taking a look at the S&P 500, this is a monthly chart, and we are at all-time record highs. And as I always like to say to members, when you're at all-time record highs, be careful of what you are shorting. Do not go shorting the indexes. You want to go shorting individual stocks? Fine. Shorting the indexes at all-time record highs? Very, very risky. Why? There's no overhead supply. No sellers from a year ago, a month ago, 2 years ago, 5 years ago, waiting to get made whole and sell when their red entry of, let's say, the QQQ, which has been red for 6 months, now all of a sudden goes positive. What do they normally do? They hit the sell button. They don't want to make money. They just want to get made whole. All right? You don't have any of that. So it makes it all the more risky to go shorting the markets right now. So I would not be a short of the indexes right now. I would look to short individual names that have gotten way ahead of themselves. And there are a number of them out there. And members, I have talked about them in the week ahead commentary. Again, it's in the members forum and in your inbox. And what we're going to talk about now is we're going to go into some of the charts that I like. I'm going to give you the freemium version. And then with members, I'm going to go into the more detailed analysis of these charts and also talking about, in terms of CROX and FVRR, the Investors Business Daily ranking of their fundamentals, so that you have an idea of how the underlying business is doing as well as the technicals. So let's get to it. Let's talk about the charts that we like. Sip of coffee first, Saturday morning, been up for about 2 hours now, getting ready to go to the gym, recording this. I may get this out later on this morning, so forgive me for saying good morning when I'm probably going to be sending this out this afternoon after I edit it. So let's get to it. All right, so again, what we're going to be going over are the weekly charts on the freemium version. I'm going to give you the macro view, and then I'm going to go into the micro with the members version. So if you're not currently a member, you want that 14-day free trial offer, there's a button in the members area, cancel at any time. And we'll talk about our entry points, exit points, stop loss points, and there's an area in the members area that'll be updated by the end of business today with those price targets, stop loss points, and entry points. So let's get to it. So first up, we're going to be talking about a stock that is not on our watch list, but I'm showing this to you for a reason. It's Snapchat. Snapchat dropped nearly 35% on the week last week. Why? Earnings. Earnings were not good. Now, you had names out last week that reported earnings that were looking pretty good. Affirm. They still closed up on the week, but on the day on Friday, a little bit of a bloodbath. Now, I like this stock. I looked at the earnings reports. I happen to like it. So I think that this stock is going to recover, but the lesson to be learned here is that FVRR and CROX will be reporting earnings. Don't let this be you. Wait until after earnings to trade these stocks. So let's get to it. Now, again, we're going to be going over the weekly charts, freemium version. If you want the full analysis, 14-day free trial offer. And the last time I'm going to mention that, so because I know people get ticked off. So CROX, weekly view, weekly chart, very, very tight consolidation. What I like here is that we broke out above the upper band of resistance. We also closed above a pivot point at 106.24. We closed at 107.54. So what does that mean? It means that we broke above overhead supply and we closed there. Most importantly is that we closed there. Now, taking a look at volume on the week was very light. Could be that a little bit of trepidation in advance of earnings. Sure. When are earnings? Earnings are on the 15th. So earnings are coming up very soon. Now, what normally happens in a situation like this, when you get a breakout, either on a daily chart, weekly chart, I don't care if it's a 1-minute chart, usually you get a retest, a retest of the breakout point. What's the breakout point? It could be either one or both of either A, this upper band of resistance, or B, the pivot point, which was resistance at 106.24, should now act as support if this is a healthy stock. You have momentum as measured by RSI and the stochastics rising. Very, very bullish stuff. Both are above 50, also very bullish. Now, moving on to our next chart, Fiverr. Again, weekly chart. The more detailed charts members are in the members area. And in fact, I'm going to post them later on as well, because I know you guys get the alerts in the Slack forum. So now Fiverr, I love this company. Really good fundamentals. We're going to go over that in a little bit on the premium version. Fiverr weekly view. We had a breakout last week. I use Fiverr. Great service. And again, much as what we're going to be looking for with CROX, we're going to be looking for the same with Fiverr. What is that? We're going to be looking for a retest of the breakout point. And that's that line here in blue. If it holds it, well, we're probably going to be buyers. And we'll add more on a breakout and above last week's highs. Now, the thing to be concerned with here is that not this week, but the next week, you have earnings coming out on the 22nd. So be forewarned about that. We don't want to be in a position where we're opening up a new trade. We have no cushion of profit to the downside for us to say, okay, and rationalize, all right, I own my stock into earnings. I had big profits. I didn't want to pay the taxes, whatever you want to make up for holding the stock into earnings rather than hedge. I wouldn't do that, but many people would. I would not be a buyer as an opening position of a stock into an earnings report. Please don't let that be you. But I still like the stock. It's optionable. If you want to sell deep out of the money puts, I would make that a put spread. What is that? I would sell a out of the money put and then buy a deeper out of the money put as an insurance policy. That way you're generating cash flow. You're kind of long the stock, but you're not long the stock. And if the shares are put to you, they're put to you at a much lower price and you're getting a discount just in case earnings don't go your way. So Fiverr looking interesting as a potential earnings trade, but I would not own the common stock. I would wait until after earnings, see what they have to say. And again, we're going to be going over the IBD, Investors Business Daily analysis of their fundamentals in a moment, so stick around. LABU. For disclosure purposes, I own LABU, not a large position, but we do plan on building it. We've owned it for a while now, and we've been waiting for a breakout. And ever since they did, this is a leveraged ETF, not for the faint of heart. So be aware that it's very, very volatile. Now, ever since they did a reverse split on LABU, that has allowed for some institutional money to go moving in and buying these shares. And you can see that the shares since the October lows have been on a tear. And this is a weekly chart. And I'm going to change this for a moment and illustrate what else we're seeing here. It's 6 of one, half dozen of the other. You know, technicians could have different views on different setups. So we were in a wedge formation. We're still kind of in a wedge formation, but we broke out of it last week. Now, what we're going to be doing is just what we're looking for on the prior charts of Fiverr and CROX. We have weekly breakouts. We love that. That's sexy to us. We don't have to worry about earnings on LABU because it's an ETF. Bravo. And we're looking for a pullback on LABU. Now, the other thing I like here about LABU is that what we have is a breakout above a resistance level here, a pivot point at 119.18. We closed out the week at 124.17. So we broke out above a declining upper band of resistance. We broke out above the upper band of a pivot point. Good stuff. And we closed there. That's what's most important. So unlike your semiconductor names, unlike your infotech names, these names have not yet begun to run. They're in their early stages. They may not have the run of the semis, but they're in the early stages of a bull run nonetheless. So as a contrarian, I like the opportunities here, and we're going to be looking to take advantage of them moving into the new trading week and weeks. Now, with LABU, what I would like to do is put on what I like to call a covered call strategy, and that's basically buying LABU and selling like a 30 delta covered call option, maybe going out using a weekly or bi-weekly option. The reason why we do that is that this is a very leveraged product, very volatile, and we're always here at the Contrarian Trader looking to put on cash flow strategies. And one of the ways you could do that is by selling covered calls and being long the stock, so you have some upside appreciation of the stock, but also you're generating cash flow. And what that cash flow does, it acts as a hedge by reducing your basis cost. And if you get a pullback on the stock and you don't get executed on the covered call, I should say, if you don't have the covered call exercised and the shares taken away from you, are you going to cry that you generated a premium on the shares? I don't think so. You're always generating cash flow. You're always generating wealth. So that's what I'd be looking to do here with LABU. And again, members, we're going to go into the daily chart here in a moment. So if you're just checking in on YouTube, be aware that there is a longer premium version in the members area. So weekly chart, LABU, what else do we like here? RSI, double bottom setup, higher lows. Momentum is building. Same deal here, higher lows on stochastics. So not much not to like here. Volume, institutional accumulation last week. So LABU, very, very bullish on moving forward. And we don't have to worry about earnings, which is a great thing. Sip of coffee time. So now, moving on to our next chart, that is the S&P Mid-Cap 400. These are your mid-caps, and these names have not yet begun to run. That's the daily chart. Let's go to the weekly chart. Now, what the street does not want you looking at is the fact that the MDY or the mid-caps, whatever ETF you want to trade, there are a number of mid-cap ETFs. And all of them are going to look the same as this. Okay, so they're based upon the S&P 400 mid-cap stocks. Now, everybody wants you, the street wants you paying attention to NVIDIA. They want you paying attention to Amazon. They want you paying attention to the fact that the Qs are at all-time highs. They want you paying attention to the fact that the S&P 500 is above 5,000. Who cares? It's a number. Who cares? I care about the setup. What is new? What hasn't run yet but is breaking out or getting ready to break out of a very sound base? Simple. Mid-caps. Mid-caps hit an all-time record high back here in November of 2021, and then they fell into a base. Let me illustrate what we're looking at here. I'll be right back. Okay, so what you're looking at here is the mid-caps, which again, hit all-time highs back in 2021. And then they fell into this rather shallow base. It's really just been doing nothing for the past couple of years. And I wouldn't call this a cup with handle formation. Most people are familiar with a cup with handle formation. I would call this more of a saucer with handle formation. And basically call it cupcakes, all right? It doesn't matter. It's just a label. What this is just a very, very sound base of consolidation. All of these buyers from back here have been sitting. They're probably gone now. And now what you have are a new tranche of new buyers in here waiting. They're looking at the S&P 500. They're looking at the Qs, and they're looking just as we are for the next best thing. They're not going to talk about it on CNBC until Wall Street gives them the okay to talk about it. This sector is getting ready for a tear. So last week, what we did is we got a follow-through week. What does that mean? Well, we had broken out above the highs of July 2023. That was right here. Then we did check back one, check back two. And this is what I was talking about with Fiverr and with CROX. You want to get that check back. You want to get that retest. That's what happened last week. And what you want to see is a follow through. And we got that follow through and we got new higher highs. Now, this is going to act as a launching pad for the mid caps to proceed up higher. This is one of my favorite charts moving forward. It's not an individual name, and you do not want to go shorting indexes right now. Every short out there wants to short the mid caps. Scratch that. Every short out there wants to short the indexes, and I think they're insane. There's too much money flowing into the indexes. You can have all the great reasons in the world. Too much national debt. We have a corrupt government. We have geopolitical risk, blah, blah, blah. Doesn't matter. The money flow is moving into equities, and whether you like it or not, the indexes want to go up higher in anticipation of rate cuts in the next couple of months. Simple as that. So members, we're going to talk more about entry points, exit points, stop loss points, etc. on the premium version in a moment. Now, the next chart I like, and not as much as the mid caps, but I like nonetheless, and for full disclosure, we own some TNA here. This is a small cap leveraged ETF. If you do not want the volatility, and I completely understand that it's not for everyone, I would be looking to buy the IWM. That is not a volatile product. It has its own volatility. It's a small cap ETF, but it's nowhere near as volatile as the TNA, which is a 3 times leveraged ETF product. All right, so moving on to the chart here. Weekly chart of TNA, what we were in was in a downtrend channel. Technically, we're still in a bear market on the small caps, yet last week we had a breakout, but we've been here before. So I'm not as bullish on TNA as I am on the mid caps because we are well off the all-time record highs. There's a lot of overhead supply to fight through, but now is the time really to begin buying these stocks. Why? It's because at the end of a bull run, and at some point in time, you're going to see your NVIDIAs of the world, your SMCIs, your Microsofts, they're going to start to peter out. And then everybody's going to start to think, okay, what's the next big thing? All right, so it's what you call the dash for trash. And all of your small cap stocks, frankly, the small cap arena has a lot of regional banks in there, and the regional banks have a lot of problems. So that they're acting like an anchor on the small caps. But ultimately, in the end, they're all going to get a bid because everybody's got FOMO, fear of missing out. And they're going to be running into these names because they haven't run yet. And that's how you know. This is when you reach the era of your taxi cab driver saying, hey, did you buy whatever stock, GameStop or AMC? And that's when you know you're pretty much at the top of a market. We're not there yet. We could still go up higher. So right now you're beginning to see strength in these names, and this is a leading indicator that we may be seeing the very beginning of a dash for trash. And the TNA is breaking out, and what makes this bullish is that yields rose last week, and technically, I'm not going to go into the jargon of why it matters, but technically, rising yields are negative for small caps. Just the way it works. They don't have access to the bond market. They need to go to the bank and say, please, sir, can I borrow more money? And they borrow at a higher price. And they may get, in all probability, will get denied. So the small caps have a lot of problems. That being said, it doesn't matter what their problems are. It's the perception of the overall market that matters. And what matters is that you have a fear of missing out. These names have yet to run. You have the mid caps setting up. You have the small caps setting up. I think that this breakout here is very attractive. And much as what we saw on MDY, on the mid caps, Fiverr, CROX, you're going to get a check back. You're going to get a check back to around $35 per share, give or take a couple of dimes. Doesn't have to be exact. And then what you're going to be looking for is the fact that it holds. Why does that matter? Well, think about this. Think about if you bought this breakout here back during the week of the 18th of December. Well, if you would have bought that there and said, I bought the breakout, I'm a champion, I got big swing, and you know what? Well, look at where you would have been only 2 weeks later. You would have been back down here. It's always pays to wait for the check back. Does prior resistance now act as support? Basically, what that's telling you is that, okay, well, you have no more now of our buyers versus sellers. Back here, the week of January the 2nd, when we had that check back, that retest, there were more sellers than buyers. Now, the probability of there now being more buyers and sellers has increased. Do we know for a fact that there are more buyers and sellers? No, we have no idea. The market's going to tell us that. We're not that smart. So what we want to do here is be very, very disciplined. And we want to wait for the check back. And I'm going to talk to members in a moment about where we want to go entering these names. If you're not currently a member, 14-day free trial offer. And thanks for checking in here. Don't forget, we're going to be going live 6 p.m. Eastern Standard Time on Sunday night. And if you're wondering about the terminology I'm using here for these candlesticks, bullish key reversal, bearish key reversal, bullish engulfing, bearish engulfing, I have a video below, 5-part video tutorial, my top 5 favorite candlestick patterns, free, sign up, and hopefully you will join us on Sunday Night Futures Live, 6 p.m. Eastern Standard Time. Hit that notification bell, like, subscribe, you know the deal. Members, let's go into the premium version. Now, beginning with the weekly chart again, folks, I want to talk about the weekly chart and another setup that we're seeing here on a weekly time frame. And then we're going to go into the fundamentals using Investors Business Daily to discuss the fundamentals of CROX, and we'll talk about entry points, exit points, stop loss points, etc. So the other setup that we're seeing on a weekly chart here that is very, very bullish is a massive, massive cup with handle formation going back a number of years. So as I always like to say, the greater the consolidation, the greater the validation of any breakout on any stock, index, commodity, whatever you're trading, it doesn't matter.